should push up employment and eventually, whereas too much should push up employment and eventually prices.
Whereas too much should push up employment and eventually prices.
In an open economy, however, some of the effects of the shifts in demand
In the open economy, however, some of the effects of the shifts in demand
spill over to the rest of the world. A sharp drop in spending, for instance, may be associated with plunging demand for imports. In which case some of the pain of a slump is exported abroad. During the global financial crisis of 2007 to 9, troubles in financial markets wreaked havoc all over the world. But even countries relatively insulated from those woes felt a chill thanks to trade links with America and Europe. According to one estimate, about a quarter of the drop in American demand and a fifth of the fall in European demand was borne by other economies and transmitted through trade. A boost to demand ought to work in a similar way, but in the other direction. As Americans spend more, some of it leaks abroad. Through purchases of foreign goods, for example, or spending on services, including tourism, which should begin to rebound as pandemic restrictions are lifted. An analysis of fiscal policy spillovers published by the IMF in 2017 found that an American stimulus consisting mostly of spending as opposed to tax cuts and worth 1% of GDP raises the output of the average country by 0.33% in the first year.
Raises the output of the average country by 0.33% in the first year.
Countries with closer trade ties experience bigger effects. The fillip to Canada's economy is estimated to be almost 3 times the average, for example.
Almost 3 times the average, for example.
If the combination of reopening and stimulus invigorates the American consumer, the effects could quickly be felt all over the world. The degree to which it is felt, however, depends crucially on the policy response, both at home and abroad. Fiscal spillovers are more powerful when recipient countries are themselves operating below potential. American spending is thus more likely to spill over to the rest of the world if its recovery is much stronger than those of its trading partners. Ordinarily, spillovers provide a strong incentive
Ordinarily, spillovers provide a strong incentive
for governments to coordinate their stimulus efforts,
for governments to coordinate their stimulus efforts,
lest some tight-fisted economies, for example those in Europe, lest some tight-fisted economies, for example those in Europe,
lest some tight-fisted economies, for example those in Europe,
free ride on the largesse leaking from more generous ones.
Free ride on the largesse leaking
Indeed.
from more generous ones.
On February 12th, Indeed, on February 12th, Janet Yellen, America's Treasury Secretary,
Indeed, on February 12th, Janet Yellen, America's Treasury Secretary,
urged her counterparts in the G7 group of countries to go big on stimulus too. Countries that free ride could find themselves in hot water with Miss Yellen.
Countries that free ride could find themselves in hot water with Janet Allen, Miss Allen.
The Biden administration has promised to be stern with countries
The Biden administration has promised to be stern with countries
that run large, persistent trade surpluses. But if America does come close to overheating, then a reluctance to spend elsewhere may be less irksome than usual.
Maybe a reluctance to spend elsewhere may be less irksome than usual.
As demand-starved countries serve as a release valve for the pressure building up at home. Growth in global trade seems to have enhanced its pressure-relieving capabilities.
Growth in global trade seems to have enhanced its releasing capabilities.
According to work by Jane Ihrig, Stephen Kamin, Deborah Lintner, and Jamie Marquez of the Federal Reserve.
According to work by A.B.C. by Federal Reserve.
They reckon that the expansion in trade has served to weaken the link.
They reckon that the
expansion in trade has served to weaken the link between changes in domestic demand and corresponding shifts in total output.
Between changes in domestic demand and corresponding changes in total output.
With net exports bearing more of the burden. Of adjustment to changes in domestic spending. In the late 1990s, for instance, measures of domestic demand grew even faster.
In the late 1990s, for example, the measures of domestic demand grew even faster
than real GDP, which was itself growing at a rapid clip. Inflation remained relatively subdued, however, in part because America's current account deficit swelled. Similarly, a surge in imports this year might dissipate potential inflationary pressures in America, while giving a lift to its weaker trade partners. The biggest uncertainty about the global effects of a hot American economy is the reaction of the Fed. Recent work by Kristen Forbes of the Massachusetts Institute of Technology suggests that domestic inflation has become more responsive over time to global factors.
suggests that domestic inflation has become more responsive to global factors,
including the amount of economic slack across the global economy as a whole.
including the amount of economic slack across the global economy as a whole.
Yet wage inflation still seems to respond mostly to domestic conditions.
Yet wage inflation still seems to respond mostly to domestic conditions.
The Fed might therefore shrug off price rises later this year.
The Fed should therefore shrug off price rises later this year,
reckoning that short-run price pressures will not translate into sustained inflation. Reckoning that short-run price pressures will not translate into sustained inflation.
Reckoning that short-run price pressures will not translate into sustained inflation
until America's job market and the world economy is fully recovered.
Until America's job market and the world economy is fully recovered.
A dovish Fed should make for a weaker dollar.
A dovish Fed should make for a weaker dollar.
And easier financial conditions worldwide.
And easier financial conditions worldwide.
Adding to the boost that comes from Americans buying more goods from abroad.
Adding to the boost that comes from Americans buying more goods from abroad.
But a really rip-roaring economy could test the Fed's patience.
But a really rip-roaring economy could test the Fed's patience.
Particularly if a yawning current account deficit.
Particularly if a yawning current account deficit.
And soaring asset prices. Cause it to worry about a build-up of financial risk.
Financial risks.
The specter of American interest rate hikes. Could frighten global markets and force emerging economies. To adopt less stimulative fiscal and monetary policies. A bit of demand spilling over from America would seem insignificant in comparison.
A bit of demand spilling from America would then seem insignificant in comparison.
That the Fed will suddenly turn hawkish still seems unlikely.
That the Fed will suddenly turn hawkish still seems unlikely.
But if America's temperature runs high enough, the rest of the world may break out in cold sweats.
The rest of the world may break out in cold sweat.
The rest of the world may break out in cold sweats.
The rest of the world may break out in cold sweats.